When it comes to investing, you may have heard the terms funds thrown around. But what are funds and how can they help you reach your investment goals? In this video, I will break it down. At a basic level, a fund is a pool of money from multiple investors and is managed by an investment company. These funds are then invested in a variety of assets such as stocks, bonds, and other securities. The goal is to provide investors with exposure to a range of investments that would be difficult to achieve on their own. So there are many different types of funds, each with its own investment objective and strategy. Here are the most common ones. First, there are mutual funds. Mutual funds are a type of investment vehicle that pools money from multiple investors to purchase a portfolio of stocks, bonds, or other securities. They are managed by a professional portfolio manager and offer diversification, liquidity, and access to a wide range of assets. Next, we will learn about index funds. These are a type of mutual funds that track a specific market index such as S&P 500. The fund manager's role is to replicate the index performance as closely as possible. Since there is no need for active management, the fees for index funds are generally lower compared to mutual funds. Next, we have ETFs or exchange traded funds. ETFs are similar to mutual funds, but they are traded like stocks on an exchange. They offer diversification, low fees, and the flexibility to trade throughout the day. ETF or exchange traded funds are similar to index funds in that they track an index. However, ETFs trade like a stock on an exchange and can be bought and sold throughout the day. Because of this, they tend to have lower expense ratios than mutual funds and are more tax efficient. Another type of fund is a hedge fund. Hedge funds are alternative investment vehicles that are generally available to accredited investors. They use a variety of investment strategies including leverage, derivatives, and short selling to generate returns that are not tied to traditional market benchmarks. Finally, there are money market funds. Money market funds are a type of mutual funds that invest in low-risk short-term debt securities such as treasury bills and commercial paper. They are often used as a cash management tool and offer stability and liquidity. So there you have it, an overview of what funds are and different types of funds available for investing. As with any investment decision, it's important to do your research and consult with a financial advisor before making a decision. But with the right strategy and investment vehicle, you can start building wealth and reaching your financial goals. In my next video, I will talk about mutual funds, ETFs, and index funds and which one could be the right choice for you. So stay tuned for that. This is all for today. Thank you for watching. My name is Parul, and if you haven't subscribed to my channel yet, I would love you to subscribe to it. And I'll see you soon in my next video. Bye.